My name is Mike Sullivan. I'm a former IRS agent and teaching instructor with Internal Revenue Service. Welcome to my YouTube channel, which they're short to the point so I don't bore you or me to death. By the way, me and my M&M man give you a thumbs up. Anyway, my topic today is, as a former IRS agent, I'm asked, how does IRS deal with your IRS tax debt? Well, IRS has generally three avenues to deal with your tax debt. IRS kind of wants to know what your current condition is. They use a form 433A or 433F, or in the case of a business, a 433B. IRS looks those forms over. They're going to ask for documentation. They're going to ask for bank statements. And they're going to want to do a careful look between liquidity that you may have in those assets and what your ratios are of income and expenses. IRS wants to make sure you're living within your means and you're not spending their money that you owe them foolishly. So IRS has created the National Standard Program. The National Standard Program is a program that is designed to let everyone know in the county where they live in what IRS expects you to live on. They do so in the categories of food and clothing, how much you should spend on a car, and housing and utilities. Pretty much the rest is a dollar-to-dollar thing that they're going to look at and make sure they're reasonable. So there's three programs IRS, in fact, uses to put you in. The first is they can put you into a currently non-collectible or CNC. I'm not going to take this call. I'll call back. So anyway, I don't do any bloopers or anything. This is a blooper. But anyway, they can put you into currently non-collectible. 40% of all open cases go into currently non-collectible. That is where you have really no money and you're living within the IRS standards. The second is they can put you into a hardship a payment agreement. And there's different type of payment agreements. The easiest one is to make a 7-year payment over the debt you have, and you can kind of do that online. More complicated ones for larger cases, you got to go ahead and you really need to speak to a tax professional. The third is to file an offer and compromise, and I don't recommend anyone does that on their own. They're long and they're complicated, and if you are absolutely broke and have nothing, you can do your offer by yourself, but they're a little more complicated than you think. IRS has a formula that they're going to use. The base formula is you must give IRS your total liquidity in all your assets. 20% is taken off for any equity you have in your home. But if you have sizable debt, you do want to have a professional look at it. So those are the three programs: hardship, currently non-collectible, payment agreement, and offer and compromise. There's two other other programs you need to know about. Chapter 7 bankruptcy, you can discharge taxes that are 3 years older, been filed for 240 days, and have been filed for 2 years and have been assessed for 240 days. You can discharge taxes in a Chapter 7 bankruptcy. The other is the IRS statute of limitation. So IRS is a 10-year statute of limitation from the date the taxes were assessed. So if you have any questions, you can call me, hit me up. If you want a question answered, just go ahead and hit me, email me, and I'll go ahead and make a YouTube and give you a shout out. Thank you very much.